What is the best time frame for trading? All right. What is the best time frame for trading? That is the questions I get on a daily basis. Say, which time frame can I use? Should I be using the 4 hour, the 1 hour, the 30 minute, the daily, the monthly? What time frame can I use in trading? So today I want us to smash that question and to also answer that question. All right. Hello everyone and welcome to my channel. My name is Ndema Zegolov, and on this channel we teach everything about business, crypto, personal finance, trading, and tips to help you stay profitable on a consistent basis. So if this is your first time coming to my channel, or if you've been watching my channel and you haven't subscribed, please hit the subscribe button below to subscribe to this channel so that you can always be updated once I come up with awesome content like this. Today we want to answer one of the highest questions of people. If you check any of my videos on YouTube, if you want to believe what I'm saying, go on any of my videos on YouTube. You must see one person asking, sir, what is the best time frame I can use? Which time frame can I use for day trading? Which time frame can I use for swing trading? And I want to answer that question on this particular video today. All right. So before I even answer that question, let's go on to this other screen. Let's go on to this other screen. So to even answer that question, asking the question, what time frame can I use to trade Forex? It all depends on the individual, all right? It all depends on the individual and the time you have at your disposal. I'm going to explain that very soon. Please don't be lost or don't go anywhere as of now, because I'll be able to explain it to have some sense very soon. It depends on the individual and the time you have at your disposal. Talking about the time you have at your disposal, you might be trading while you have your job on the side, which is what I recommend, which is what I do myself. I have other businesses I run, I have other companies I run offline, which if I'm not trading, I'm doing those other businesses. I'm running those other offline businesses. That is what gives me sometimes to just take my mind off the market, and when I'm coming back, I'm coming with a fresh brain, with a fresh ability to be able to analyze the market. Good. That is for somebody who is doing off the market. Now, if you're somebody who has the time, you have the time on your screen, you want to stick on your screen for the whole day, you want to be looking at the market going up and down, that is still somebody who has the time. I might not have the time, you might have the time. That is why I said the time frame you're going to be using will depend on the time you have on your disposal and your risk appetite. Let me explain that on this particular screen. So okay, you can see on my screen, I have different types of traders. We have what we call scalpers, we have what we call day traders, swing traders, and long-term traders. By the end of the explanation on this video, you'll be able to boldly and even put your hands in your pocket, easily know which time frame you should use for trading. All right, even though I recommend every day you should have an idea of different time frame, but now by the end of this video you'll be able to know which time frame is best for beginners, which time frame is best for advanced traders, and which time frame is best for intermediary traders. Let's start. Let me start explaining the table. Here we have scalpers. All right, scalper is a group of traders. That means you open your trade. A scalper is somebody you open and close your trade within minutes, or even sometimes within seconds. All right, so you call yourself a scalper. Then after scalping, you have what we call day traders. Day trader, just from the name, it means your trade is open and closed within a day. So your trade must be open and closed within a day. Then the next group of traders we have here are what we call swing traders. Swing traders, your trade is open from days to even months sometimes. All right. Then after that, from days to weeks, Then after that, we have what we call long-term traders. Long-term traders, your trade is open for weeks up to years. All right. So there are some people used to have open positions for 2 years, for 3 years, or for 4 months, for 5 months. All those people fall under long-term trading. Good. These are the factors I'm going to be using to explain all these different quadrants: scalping, day trading, swing trading, and long-term trading. These are the factors I'm going to be using, so that by the end, let me undo this. I already messed up with this one. Let me undo this. Good. So that by the end of the video, you'll be able to know which quadrant you belong and which time frame is the best. Let's start with flexibility. All right, you can see each quadrant is having these 4 points: 1, 2, 3, 4. The first one is flexibility. The second one is transactional cost. The third one is trading opportunities. Then the last one is ease of entry. All the points are self-explanatory, except the last one, which is the ease of entry. Ease of entry is, it just explains the difficulty level, or the expertise you need to be able to trade on that particular time frame. All right, the expertise you need to be able to trade on that particular time frame. Let's start with the first time frame. The first time frame we have here, let's start with the scalpers, because many people want to scalp. 80% of people want to scalp. Let's analyze so that you'll be able to see if it is something you want to try, if that's where you belong, and if that's the time frame you want to use. Let's start with the first point. What was our first point? Our first point was flexibility, right? So talking about flexibility, scalping has no flexibility. Flexibility flexibility just comes in when you can place your trade and even leave and go and play soccer, or leave and go and play basketball, or place your trade and go to your job site and only come and maybe check the trade maybe 2 or 3 times a day, or maybe even sometimes you don't even check it within that day. That is what they call flexibility, all right? But if you are scalping, flexibility just all the 4 points, 0. There is no flexibility, because as a scalper, you need to stick to your computer. You watch your computer like a hawk. All right, you watch your computer like a hawk, the movement, because you open and close those trades within seconds. So for flexibility, a scalper doesn't have any flexibility. Then the second point on our list is transactional cost. For a scalper, since you're going to be opening 100 and 100 of trade within a day, the transactional cost is going to be very high, because remember, you are paying spreads. You are paying a spread for any trades you open, all right? But now, if you open many trades, you also pay a lot of money for transactional costs. That is why I'm talking about transactional cost. The transactional cost for a scalper is very, very high, all right? Now, let's go to the next point. The next point is what we call trading opportunities. Okay, this is what used to lure many people into thinking scalping is the best, because of many trading opportunities. Since you are scalping, within a second, within a minute, you're going to see many opportunities, many chart opportunities and stuff. So here, the opportunities are many, all right? The opportunities are many here. Here, this is the only one I'll be able to give this. So this one is having many trading opportunities. As a scalper, you have many trading opportunities because you are trading the lower time frame. Let's talk about ease of entry. Ease of entry as a beginner. Don't think of going into scalping as a beginner, because ease of entry is very difficult. You need expertise to be able to scalp. You need expertise to be able to do what we call high frequency trading. So ease of entry here is not for scalpers. Good. I hope you guys are enjoying the analysis, all right? I hope you guys are enjoying the analysis. So that one is for scalpers. That one is for scalpers. So even if you you want to take a screenshot or write this down, that is that about a scalper. A scalper see flexibility. A scalper doesn't have flexibility. And then transactional cost. The transactional cost for a scalper is very high. And then trading opportunities. That is the only thing. So the only advantage a scalper has is the trading opportunities. Now let's go to a day trader, all right? And I already explained, as a day trader, you open your trade and the trades are closed within a day. All right, so let's explain for a day trader. Let's start with the first point, because number one, this is the first point, flexibility. If you are trading the 30-minute time frame and the 1 hour time frame or the 2 hour time frame, you have, remember, flexibility. Now I'm also grading it in terms of 4 stars, all right? So here I'll give this one 2 stars. Let me give it red. So this one I'll give it 2 stars. On flexibility, I'll give flexibility 2 stars, all right? Now, after flexibility, let's go now on transactional cost. Transactional cost for this one, instead of having 4 stars on this one, I'll give 3 red stars here, because it also has transactional cost, since you are also using a lower time frame and you'll be opening and closing many positions. So the transactional cost, I'll give 2 stars instead of 4. Good. So let's go now to the next point, which is trading opportunities. Yes, it has also trading opportunities. Instead of having four ticks here on trading opportunity, this one has three ticks for trading opportunities. All right, so this one has trading opportunities, so you can already see. Then ease of entry. The ease of entry for this one is still under red. It's still under red, but instead of having 4 red stars, this one is 2 red stars, because okay, with a little bit of experience, you can start doing the trading. You can start trading with the 1 hour time. Remember, this is in terms of the time frames. This one is the 1 minute time frame, 5 minute time frame, and the 15 minute time frame. The trading is the 30 minute time frame, the 1 hour time frame, and the 2 hour time frame. All right. Now this one you can already start seeing. You can see this one has some flexibility. It doesn't have a transactional cost, is still there, but not as much as this. This one still has the trading opportunities are there, but not as much as this. And this one, the ease of entry is still difficult, but not as difficult. The difficulty level is not as opposed to this one. You see how interesting it is? Okay, let's go now to the trading. Let's go now to this one, the H4. All right, the H4 stands for the 4 hour. The 4 hour. All right, let's go to the H4. The H4, which is the 4 hour. On the H4, we're just going to be taking it directly from here. Flexibility is there. If you have your job, if you have your job, which is what I recommend, you should always have your job on the side, where after trading, you can always go to your job. If you have your job on your side, this one will give you flexibility. Oh, sorry, it's green, so I'm going to take green. So this one will give you flexibility. 4 ticks on flexibility. Flexibility with a 4 hour time frame, you have your flexibility, all right? Now, transactional cost. The transactional cost here is low, so I'm going to give it 4 ticks even. The transactional costs are low. Then trading opportunities. The trading opportunities on H4 are many just as on scalping. Why? Because on H4 you can easily spot many levels, many support and resistance level. Trend line are very visible as compared to other time frame. So trading opportunities, I'll put 2 ticks. All right, I'll put 2 ticks on trading. I'll put 3 ticks on trading opportunities. And then ease of entry. This one is the easiest if you are a beginner. If you are a beginner, the ease of entry here is 4 ticks. 4 ticks for the ease of entry, because it gives you the time to be able to really study and understand what is going on in the market as a whole. The 4 hour time frame will give you that ability to understand, to see different levels, to see different support and resistance, to see different dynamics of trading without the too much noise. Without the too much noise that you have if you were trading if you were a scalper or trading the 1 minute time frame, the 5 minute time frame, or the 15 minute time frame, or the 1 hour time for 30 minute time frame. But the 4 hour time frame will give you all of this. So even from this, you can see the 4 hour time frame is already winning. The 4 hour time frame has won in everything, in flexibility, transactional cost, trading cost, and ease of entry. Now let's go to the long-term trading, which long-term trading are for like retired people, right? I'm still active, I'm still vibrant, I can't be trading long term. I want to see quick result. I want to see my result. But anyway, let's mention about long-term trading, because there are some people who are actually practicing long-term trading. Under flexibility, long-term trading is very flexible, very, very flexible, because you place maybe 2 or 3 or 4 trades within a year. So it's very flexible. Trading cost, the trading cost is very minimal. The trading cost is very minimal. Trading opportunities, I'm just going to put this one on 0, because the trading opportunities on long term, the trading opportunities are very few. All right, you can just have 2 or 3 or 4 trades within a year for a long term trader. Remember, you are using the weekly time frame, monthly time frame. Within a year, you might have few trades. Then ease of entry for this one, yes, I'll give it 2 ticks for ease of entry. 2 ticks for ease of entry, because it doesn't contain all the noise, it doesn't contain all the volatility, and you have the time to really see what is going on in the market. So with that being said, can you guys do the judgment and tell me the best time frame, which is the best time frame for a beginner, an advanced trader, for even a pro trader? Can you guys see, even from all my analysis, starting right from let me close this, starting from a scalper, to a day trader, to a swing trader, to long-term trading, and from all this analysis, from the green tick stands for who won, who won on this particular. So by just doing this analysis, can you guys tell me the best time frame for either a beginner, a trader, or this? Let me get a drum. Let me get a drum. So the best time frame is the 4 hour time frame. Simple. The 4 hour time frame is the best. Even I myself, even though I'm already a professional, I'm already a profitable Forex trader, I make money now consistently in the market. But most of the time, the time frame I still use is the 4 hour time frame. All right, I still use the 4 hour time frame most of the time. Even though even though you should have an idea on all the different time frames, so that the day where you have time on your disposal, if you have time on your disposal and you think you're going to have the time to be looking on your computer or to be watching your chart, then you can go down and you scalp. You can go there. The same strategies that will apply for the 4 hour time frame are the same strategies that will apply for the 1 minute time frame. So if you have that time on your disposal, you can go down to scalp, you can day trade, and if you, by the time you are retired, maybe you can then start doing long-term trading. You see, so you should have an idea about all the different time frame, because the same strategies that you use on the 1 minute time frame is the same strategies you use on the 4 hour time frame. The same tool, the Fibonacci you use on the 4 hour time frame is the same you use on the 1 minute time frame. But yes, talking about flexibility, transactional costs, trading opportunities, and ease of entry, H4, the 4 hour time frame or the H4 time frame has won the battle. So the best time frame for trading is, let me get the drum again, 4 hours time frame. So you can quote me anywhere. I've done the best analysis possible to show you why the 4 hour time frame is the best time frame for you to trade, even though you should have an idea about the different time frames. So with that being said, we've come to the end of this sweet video, and if you've enjoyed the video so far, please smash the like button below, share the video with someone, and if you like the way I teach, please do subscribe to the channel. And if you want to also use the same broker I use, then check the link below on the video description to use the same broker I use. Then also follow this video, watch this video. I also explain something in relation to time frame, so watch that video. And if you haven't watched all the videos on the playlist, watch this playlist. And if you like the way I teach, hit here to subscribe to the channel, and I'll see you guys on the next video coming. Peace.